Hey folks, Nick here. Let's discuss having an edge when trading. So today is 10:06. I'm going to use today as an example because it's very clear. And every day I do homework to find the levels that really matter. Most of the ticks, this is the S&P, 2-hour chart. Most of these ticks don't matter. Only a few of them matter because they're at the right spot. And that's how I can get an edge, when I know where those spots are. So not everybody has time or the skill to dedicate a lot of time to get this done. So that's why they get help. And I share mine with everyone. I would do it for myself even if I didn't share it. So every day I share the levels that matter. And I used to put them in writing, and I noticed that not a lot of people are reading them. So I started doing them in lines and arrows. So basically, like today, the morning note was to chase the white line for the S&P. So it's hard to find these lines without having experience in doing it. So here are the lines that I put. I know they're going to be scary at first, but let's talk about the edge. Why do you need an edge? Because it's a competition. It is a competition, believe it or not. When you buy shares or when you buy a stock, when you make a bet, somebody's making the exact opposite bet. That's why you can make your bet. So when you buy shares, you think you're a genius and they're an idiot, and vice versa. So give myself an edge by knowing what not to do where. For example, I knew that this was not a place to start longs. So did you if you saw my chart this morning, and I'll show you. So these are the lines. There are going to be plenty, but this is because it's one day at a time. I'm going to move forward to today. Before the day started, I shared lines, and they were like this. In fact, I'll show you where the lines are. One of these. Where is it? Where is it? Okay. S&P. This is it right here. Okay, so this is the chart that I shared before the market even opened. They were toying with the trigger line, and I said if taken out, they're going to break out. Trigger if taken out. They're going to stall right here. This is me saying this before the action even started. That's what happened here. They toyed with it, they broke out, they got to the first level, and they failed. I didn't pick this randomly. I picked it because of prior stuff I saw on the chart. Let me zoom in more so you can see it, eliminate all the noise. So this was my guiding map. So in the morning, if I got to here and I said, oh, I feel like buying, the FOMO kicks in. And then I would look at my charts like, nope, this is where I said to myself, this is where Nick said, I shouldn't be starting here because that's where they're going to fade. So whether this happens like this or down like this or down like this, I don't know, but I know that this is a stopping point. So how do I use this information? I don't start longs here. I wait for the breakout to clear it, for them to clear it. Or I wait for them to fall down and gather more, fall back and gather more oomph to get the job done, like they did here. All right, so now that they've fallen down to here, I know that they're into support. The day stopped. This action here is after hours. So the day stopped exactly at where I thought it would stop, at this point right here. So now the bounce didn't hold, and they're trying to trigger this. Guess what? Even if overnight this happens, this would be a buying spot, not a shorting spot, because this is proven as a bounce zone twice before. The assumption is that it will hold one more time. And if it doesn't, if they bounce and fade again, then it becomes a head and shoulders. So the edge is knowing I don't chase here. The edge is knowing I don't panic here or here. That's how I give myself an edge. And that is true on every chart that I share, or anybody can share. But if you have time, you can find these levels yourselves. So let's go pick at another one. I'm going to go to the Dow. I think this is it right here. Yep. All right, so here's the Dow. Before the day started, we were just before the resistance that I noted. It's a zone, 2 bars up here. And then I noted that if they break through the resistance, they can slog their way onto here. So let's see what happened in real life. This is the Dow. That's that same chart. Is it the same time frame? We are looking at 2 hours. Yep, 2 hours. So let's reset and zoom in. All right, so they were toying with the resistance word, they broke out to this point right here and failed. This is where, look, that's where they actually failed in the day. This is where days before that, not even today, I drew this line and I thought they would fail here. Guess what? I did it on September 21st. I'm not Nostradamus. This is a line that matters. I found it before. I found it again. And I guarantee you I did this without looking at my red one. And then look where it exactly happened. I'm going to put a line. Look at the dashed line that connects all of them. Pop, pop, pop. So knowing where not to chase saved me this hassle. In this case, there was extra juice on the drop from Boeing headlines. And so what about the headlines? The headlines, I know nobody's going to believe this. It's a very hard lesson to swallow. Trust me when I tell you, the headlines don't matter. You're like, bull crap, they don't matter. Look at these red candles after he tweeted. President tweeted. Yes, but they wouldn't have changed the fact. So how did I know where it's going to come out? Here, this is what I'm saying. Do I have a time machine? I don't. So did I know exactly that this is where it's going to come out, the headline right here? No. So how did I know that? So the headline did not change the path of the price. It just expedited what was supposed to happen, and sometimes it exaggerates it. In this case, it exaggerated it. It didn't expedite by much. They were trickling up there anyway. They were going to hit it and fail a little bit. They failed a lot of it because of the headline. It didn't create a new path. We didn't fall because of the headline. We fell now because of the headline, but we were going to fall, if not now, within the next couple of hours. And the drop was a little bit bigger than it should have been, but it didn't change the path. That's the point of the headlines don't matter. Only a few headlines that have the capacity to do this and continue on and on and on and on and completely change the ball game. 3 of them happened in the last, 10 years. And you can do your homework and you'll find that. I did a video on it with the S&P, how I drew the box, and I said this time we'll hold because of those other 2 incidences were not there. So the headline that changed the world was the global quarantine. That definitely changes everything. Every business stops making money. Every person stops making money. That is a definite game changer. Of course, that matters. The other one in 2018, December, when the Fed said, we lied, we're not going to be raising rates on autopilot. We're going to be actually cutting rates down to 0. That was a game changer because that changed the way money flows in the economy. That changed the game. 2016, the Trump election was a game changer because he also changed the structure. He changed the business tax structure so that everybody immediately got a bump up in taxes. What was it, 8 points, 7? I can't remember what the drop was on corporate taxes. That changed the game. On top of it, there was deregulation of banks, blah, 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 blah. So that was a game changer. These headlines here that no stimulus now doesn't change the game. We had no stimulus. We have no stimulus. And we knew that 2 months ago when the politicians went on vacation. The writing was on the wall. Besides, the White House has stimulus already on the executive order. So it's not a new thing. It's already priced in. The effects of this quote headline is already priced in. But really, the only evidence of the fact that the headline didn't cause this is like, how did I know at exactly the right minute when the headline was going to break out? This will suggest that I knew ahead of time that the headline was going to break out right here, and I didn't. All I knew is I had a little bit of knowledge of the charts, and this happens often, over and over and over and over again. So this gives you the edge. I'll show you a real-life example of the edge. Nothing to do with this, nothing I shared in the morning, but something that I shared with friends that I was online with during the day. Twilio, I'm going to go to a 5-minute chart, maybe 10, 15-minute chart. 10-minute chart. Okay, so this was Twilio today. It too was happy, happy, happy. Boom, it fell. I wasn't tracking it. I didn't have lines. I didn't pay attention to the fact that it was approaching a prior fail, but that wasn't the point. The point comes after what happened. So as it fell to here, I happened to look over at Twilio and I said, and I shared it, somebody who's fast trading should go long Twilio here. I don't follow. I used it as an example. I said I don't be a sheeple. Thanks, Dave. And follow the people that are buying puts or shorting it. This is where you buy it with a stop of here. If this fails, then you stop out. And then I said the upside was going to be here, here, and here, and I missed it by $1.50. So within 1, 2, 3, 4, 5. So within 50 minutes, the whole thing had priced out. So somebody that was actively trading, if they had an edge like we do, this is the same type of edge I do in the morning. So this is the type of benefit from this chart. Having these levels ahead of time. I just showed you a real life application of this concept that happened also today after the fact. So I didn't know anything about Twilio before the fact. I saw this happen. I looked over and I was like, guess what? Same knowledge, same concept. The FOMO is going to kick in. People are going to pile in at the wrong spot, take advantage of it, be the other person, take advantage of it with a tight stop. This is a trading exercise here. And the other one is being prepared for the day to stop me from buying the calls at the top of the day. So you see the difference? All right. Hopefully this helps reading the morning notes that I share. So for example, the note said, I don't put a lot of words anymore. It said, follow the white lines on the E-mini. Follow the yellow lines on the NASDAQ. Follow the yellow lines, and it just says on the small caps, they had the biggest move today. I said, if they take out today's resistance zone, big upside. And then, let me see here. This was the picture of it on the small caps. And they immediately priced all of this in one candle. That was their mistake. And they hit resistance and failed. But it doesn't change the fact that they did exactly what we thought they were going to do. All right? So get prepared, use the tools you get, and you'd be a better trader. You would have the edge. I keep trying to get an edge. I recently got this tool to help me get an edge in a place where I don't have an edge, which is sentiment. Okay, so these guys have figured out a way to do something about sentiment and measure it somehow and quantify it. And they give me a number, and I know that now I have some sort of an edge. It's not a trading tool for me. I mean, you could use it as a trading tool, but you have to really study it. It is that good. But to me, if the amount of time I have dedicated to it, so far I don't have that capability. But I use it. It's a tool. I added it to my toolbox. So the charts are tools. I have them. I'm sharing them. If you're actively trading, or if you're worried about these candles, then you should be reading the charts. If you're an investor, really an investor with multi-year time frames, you shouldn't even know about these candles. And if you do, then you should be honest with yourself that you're not an investor. You're more of a trader than you think you are. And you need the short-term edge. I'll show you another edge. I'm going to go to a 4-hour chart for a second. Okay, I lost it. Where is it? I lost it. I had the cure for cancer. Is it a YM? Anyway, I lost it. Found it. I knew it was the NASDAQ. I just had the wrong ticker. So the ETF, the NASDAQ, QQQ. All right, so tight range, right? So here's another edge I have. When I structure a trade, I use an edge that I've placed a while back. See that little arrow right there? I'm going to highlight it and zoom out a little bit. This was homework I did way back here. And something happened back here in July. And I noted a range that looked pretty interesting to me. So I highlighted with 2 long arrows, 1 and 2, 1 and 2. I know there's a lot of lines. Ignore all the rest. I'm just concentrating on this circle, oval shape right here. So this zone, to me, was meaningful. Look how it played out. That was my edge. So as it fell to here, I say, catch the falling knives, and they go up. Sorry about that. That was pretty loud. And now they're coming back into the zone. They're not even in it. So to fall back into the zone, the bears will need a reason. And technically, if they break through this, they could come back into it. And guess what? If they do, I will buy the dip, just like I did before, because the presumption is they will hold. That's an edge I hold. So I'm watching, and I keep these lines because they mean something, but every day I use them on a smaller time frame than this to find intraday levels that matter. But it's the same concept, whether on a smaller time frame, whether on a daily. These become pretty noisy, but these are shorter time frame notes. But there's the zone. You see it? When I zoom out, it looks a little clearer why it was interesting to me. These were 2 days. So I marked it, and it's coming back into play. So give yourself an edge. All right, Nick signing out.